Good morning. It's Monday, August 4th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I'll be on CNBC at 1:30 p.m. Central Time covering the precious metals markets. I'll also give you an actionable trade idea on that particular program. So you have to tune in to CNBC at 1:30 and check that out. So looking at the markets overnight, futures are set to begin the week positively, supported by optimism regarding potential Fed interest rate cuts. Morgan Stanley recommends buying any kind of pullbacks on U.S. equities, and Goldman Sachs highlights the exceptional growth rates in the big tech stocks. So you look at the equities overnight, you do have the FANG stocks just about up 1% here, leading the charge, followed by the Russell 2000 all the way down to the S&P 500, up about 0.5%. Now, Trump said he'll announce a new Federal Reserve governor here and a new jobs data statistician in the coming days. Inaccurate BLS data really makes my job frustrating because of the fact that if you get the jobs data so wildly off, you're going to get inaccurate predictions in the dollar index in 2-year and 10-year Treasury notes, Fed interest rate cuts, which will affect the gold market, affects the silver, the copper market, global growth, and the trickle effect all amongst down the 27 major commodities. Now, we are heading into another week here, another busy week of earnings. You've got 330 of the S&P 500 companies. They've already reported earnings so far with 82% beating, where you look at Q1 here, you had 78% beating. So we're looking a little bit better as far as the economy is concerned. Now, the amount of interest rate cuts here that have been repriced back in the market sits at about 57 basis points of easing by December. What does that mean? That really means that 2 to 3 potentially are on the table here. But in my opinion, the U.S. economy should be able to avoid any kind of significant downturn here. We have active trade agreements going on with the European Union, the UK, Japan. We're currently working on a deal with China. News that President Trump may visit Xi Jinping in China here brings some more optimism to the table. The earnings are significantly surpassing any kind of estimates. The economy is growing and inflation seems to be declining here. Discussions about potential interest rate cuts, they are back on the table. You got the big, beautiful bill here that reduces taxes and promotes investment here. So the sell-off on Friday was kind of a normal reaction following several weeks of consecutive new highs here. So looking at volatility and option dealers here, the S&P 500, it has moved back into a negative gamma regime. It's really indicating that the conditions for increased volatility are reemerging. So that scenario, what it means, and this is something that we get from Bank of America as far as this gamma, which way things are shifting here. The option dealers, they are really compelled to hedge their delta exposure by acting in the same direction of the underlying market. So that means that as the market presses lower, they're going to have to short more. And then as the market goes up, they're going to have to buy more. So expect to see some extremes. And that's where you go back to April, where it goes into this negative gamma situation here, and the market starts selling off and they keep pressing it lower and they keep selling into it here. So it's just something that we got to watch here as far as volatility is concerned. So I want to measure and map some of these key levels of support with the S&P 500, that 6250 being your critical level of support and also the low of the day. We'll want to look at numbers like 6330, 6350, where we could start to really push on higher up here, and we could start to target 6,500 onto the upside. If you know me, I'm a bull on the market. It just is what it is here. So looking at Europe and Asia here, European shares, they open higher. The Swiss market, it did pair some of its losses here. There was a 39% tariff put on. So if you're going to go out and buy a new Rolex, hey, it might be a little bit more expensive here. Going to Asian trading, the Asian equities, they did trade in a barely narrow range here. In Japanese stocks, they led the decline here. In South Korean stocks, they both rose. The MSCI, that's what I look at, it gained slightly after pairing some of its losses. So remember, we look at the stock 600 overnight. We look at the MSCI because we want to see what happened across the ponds in either direction coming into the markets here. So economic data here, we do have factory orders, we have durable goods, but the key economic data release is really the ISM coming out on Tuesday. And there's several speaking engagements from Fed officials this week, including Fed Governor Cook on Wednesday. That's really the one that we want to watch here. So markets at a glance, again, equities pushing higher, dollar index off just a bit, foreign currencies all pushing up, all your agricultural products are lower, your energy products, crude oil futures continuing to sell off. That's something we're going to want to watch on the chart back, because we could be getting back down to a level of support. And if the economy is going to be robust, then we might see crude oil futures kind of hang into those lows and start to push up. We'll also want to monitor OPEC and OPEC Plus, what their latest developments here are in the markets. You got Bitcoin futures up over 1%, just under 115,000. Gold futures up $21 back at 34.20. You got silver futures up 37 cents. Copper futures just pushing a little bit higher here. So starting to show just a little bit of life to that market, but it's really anchored until it gets some more data here. And platinum futures pushing up about $8 as well. So a lot of green on the screen and a lot of concentrated red as well across these markets here. So looking at some insights, according to Goldman Sachs prime brokerage data, hedge funds modestly bought the U.S. equities after experiencing 4 consecutive weeks of selling. So that means that really, and this is what I talked about, was those hedge funds, that the dip buyers were very active in the market. So the flows were driven by the purchases really outpacing their short sales about 2-to-1. So they're really trying to reposition here. And that's what I felt that, and that shouldn't use feelings again. That's what really occurred here on Friday, was you had that real aggressive sell-off. But oftentimes, when you look at these markets here, and a lot of people are day traders and they see that the market is moving abruptly in one direction, you really want to take a step back and look, hey, where are we at here? Because we're only off about 1% or 2% from the all-time highs in the markets, which tells you that we're not in some kind of correction territory, crash imminent type of situation, things like that, and that the dip buyers are going to be the most active traders that are mostly out there. Now, pushing to the metals markets here, you did have Citigroup. They raised their near-term target to $3,500 an ounce, and they're really forecasting, they're saying U.S. growth and inflation. That outlook has worried a bit, and I think that that's actually inaccurate for Citigroup to come out and say that. I think the reality is that you do have tariffs that are continuing, but the tariffs that are not at an aggressive nature. You do have the softer labor data, and I think that it shifts the focus from all the narratives they were using before to looking at, hey, the Federal Reserve is set to aggressively cut rates. The dollar index should have peaked here just recently and will start to come off a bit. We'll also see 10-year Treasury yields continue to weaken just a bit, and that's where you get some momentum behind the gold market. We've also haven't seen any kind of real central bank purchases recently, so any kind of weakness in there we'll want to look at as well. Now, looking at the hedge fund managers, they did cut their net bullish gold position and silver to a 3-week low. And that's really the reason why we're seeing a lack of performance to the upside here after silver futures pushing up just below that $40 mark and starting to come off a bit. So you get to the exchange traded funds. Well, they cut about 32,000 ounces of gold from their holdings here in the previous trading session. We were up about 2.2% here for the gold market on Friday, advancing after that really weak jobs data. And if you get the chart pack, we bounced off a critical level of support that we outlined before. And oftentimes, we start to gravitate towards different levels of key support and resistance. So if you looked at the silver market, we were predicting that it would bounce off of a critical level of support and go up to test just about that $40 range, and it did here. We're not saying that the market has to hit specifically 40 on the head. What if the market gets to 49.98 and then it crashes from there? Well, the people that were holding out for 50, well, they're going to have a problem. They really want to reassess things. That's why we look at the tactical ranges that's volatility adjusted, and it takes feelings aside, it takes whole numbers aside, and it looks at fractal math and algorithms to determine where the market could potentially land on any kind of given day. Now, if you look at the silver, they did cut about 1.8 million ounces of gold holdings in the previous session. And that was something that I really wanted to watch because those purchases had really accelerated in the silver market leading up to that. And I want to see how they're going to react when the market fails to break through key levels of resistance. And as the market starts to dip, will they come back in and start buying? So they reduced their gold holdings last week, just under about 100,000 ounces. They reduced their silver holdings just over 2 million ounces. And you look at the gold silver ratio, well, that's back at 91, 92 to 1. So we'll have to wait and see here what's going on. But I'd say a lot of discussion around Fed interest rates going forward is really going to help boost that gold market here. And it should start to pull away again from the silver market, as frustrating it is. You really want to see some kind of action in the copper market in order to promote any kind of growth in the silver market. But again, that's my opinion. Guys got any questions? Shoot an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.